Good morning then folks, on Wednesday the 23rd of August as we head into European trade today on a somewhat choppy overnight session, certainly in the FX space. Equities have had a bit of a bounce back since the sell-off yesterday in the US session yesterday, but markets do lie in wait for the Jackson Hole Economic Symposium a little bit later on in the week, starting off tomorrow. Apart from that, you can see the Chinese yuan strengthened a bit, should I say, against the dollar after the PBOC set their daily fixing higher than expected. Now they have an onshore currency that they allow to trade within the 2% band, and they raised the fixing rate for that overnight pre-market open. So the Chinese yuan a little bit strong overnight in anticipation or in lying in wait for further stimulus from China, which is likely to be supportive for markets as and when that does come out. And a slight bit of confirmation that we are going to get more stimulus from them. So should be somewhat supportive for equity markets, certainly in the near term. You can see sit high ahead of Nvidia results, yields near highs, but I mean I struggle to see why stocks would rally with yields near high. I mean I struggle to kind of decide why that would be a positive outcome for stocks at the minute. The higher yields go, surely the more negative that is for stocks as interest rates continue to rise. The higher yields go, the more likely of a recession they are going to cause. So we'll see how that plays out, but that can also completely change around once we get around to the speeches from Jerome Powell over the next number of days. You see Australian dollar gets commodity lift, New Zealand bonds left struggling, a bit of a bounce back overnight, but they held up surprisingly firm yesterday with pretty broad-based US dollar strength. So that was a bit of an interesting one yesterday, but in terms of looking for fresh direction on things, we are really struggling for where to take markets at the moment as we head into Jackson Hole. JGB, Japanese government bonds, 10-year yield hits 9.5-year peak as BOJ intervention absent, and that is another article you can see up here. Japan's Nikkei seen rising nearly 8% by year end on ultra easy BOJ policy, and the longer that continues, the longer the BOJ stay absent in terms of altering their monetary policy, it's likely to be supportive for the Nikkei. So if stocks do turn around, stocks do start trending higher, Nikkei is a good one to look for some upside on, with the Bank of Japan keeping their ultra low interest rate and ultra easy monetary policy as they call it. Oil ticks up as markets weigh rate hikes. China gloom. I'm not sure why oil ticks up if markets are weighing rate hikes in China gloom. So a bit of an article just to talk about something, but weighing that up against potential supply tightness with obviously Russia and Saudi Arabia decreasing supply of oil, but I'd have to think that move is largely priced in unless they extend cuts through October. But apart from that, really, there's not a great deal to go off. You can see some stock index upside. Obviously, after the sell-off yesterday in the US session, it's not really unreasonable to suggest that would start to push higher. Certainly gradually. I mean, it's not exactly up by a massive amount as we head into European trade, but as we do open up for European trade, they can easily continue higher yields. Certainly in the US, slightly lower, as you can see. That also lending a bit of support to stock markets. You have to imagine, the Chinese in preparation for some more monetary stimulus, more support for their economy. You have to imagine that probably is a contributing factor to a slight bit of upside in stock indexes in the overnight session. Commodities not doing too much, bond yields down lower, which couple that with China's story, probably a bit supportive for stocks when you think about it. The US dollar lower across the board. You've had pretty broad-based US dollar strength recently, so not too surprised at that, to be perfectly honest with you. You can see the month-to-date percentage change. Now some of these up by 5%, depending on where you look. Others up 2-3%. So pretty strong month for the US dollar. So a day or two when it pushes lower in the lead up to Jackson Hole is completely understandable. Australian dollar, Kiwi dollar getting a bit of lift, maybe potential for a bit of support from China, a bit of strength in the Chinese yuan. That is obviously being a little bit supportive for Australia. The Japanese yen slightly higher, it's a massive weakness, massive downside over the last number of months. So that is not too unreasonable when you have a look at yields, and yields are slightly lower on the trading session today. In terms of the economic calendar, we have got the manufacturing PMI from a manufacturing PMI from Germany at 8:30. Now that is at post-COVID lows. I say post-COVID lows that we are at are COVID lows. Before that, it hasn't been as low as it is now since kind of 08, 09, back at the back post financial crisis back in 2008. So any sort of downside in this would further reaffirm kind of negativity going forward in the European economy. So certainly not a good thing for these, certainly not a good thing for European related assets if that does miss consensus at 8:30. So something I will keep an eye on as we come around to it. But got some PMIs this afternoon from the US that we will speak about in a little bit more detail as and when we come to it in a little video a little bit later on. But that's manufacturing PMI, something we need to keep an eye on. 38.7 consensus. Below that should probably be negative for European related assets. And yesterday was massive downside in the euro. It wasn't really replicated across many of the other currencies. Aussie Kiwi held firm. Sterling had a bit of substantial downside. Dollar Swiss popped higher, dollar yen popped higher, dollar CAD popped higher. But Aussie and Kiwi, these two moves here, I suppose it is what, 40-45 pip move. So when you think about it, it is still a pretty sizable move. But that on euro dollar, a near 100 pip move in the space of 4 or 5 hours, or 5-6 hours, without any real clear reason is interesting. Now it obviously does go in line with the trend, so just kind of selling rallies. So you can see what markets think of euro dollar at the moment. Anytime it pops higher, certainly since mid-July, anytime it's popped higher, markets have aggressively sold back into it. So the more it keeps popping higher, the more you think probably to sell it. Apart from that, if the yields do pull back, we get these yields pulling back now. As you can see, the 10 years dropping. You have a bit of a double top and you've broken the neckline now and you are pushing lower. These yields do pull back. Gold longs is a decent bet, but this dollar yen chart is what I think you need to keep an eye on. You've got a failure to create a new a failure to create a new higher high over here. If you have a look at a slightly longer term chart, you can see obviously quite a clear uptrend. You go back here, quite a clear uptrend. You go even longer term, quite a clear uptrend. You come up here and you fail to create a new higher high, right? You sort of double topped on a lower time frame here, and you have started to push lower again. You got a nice little retest there yesterday, which is pretty nice, but that has continued lower as well. Couple that with this pullback in the US 10-year yield. The fact the US 10-year yield is pulling back, even if you get back towards these sort of levels down here, that should cause pretty substantial downside in dollar yen, certainly down to maybe down to these levels down here and lower. So the lower those yields continue, the easier of a short that becomes. And dollar yen shorts is a good trade on a pullback in any yields, as it does follow it quite closely, but it has come a long way, so a bit of a pullback is not completely unreasonable. You would then look to be long some gold. Have a flick across like that has come a long way. That trend slightly overcooked at the moment. You got a bit of a triple bottom kind of thing over here, multiple rejections of the lows back here. You then managed to break through these highs back here, signaling a bit of a shift of momentum, and now you've kind of printed a higher low, and then looks off to the races at the moment, and that is driven by a pullback in yields. The longer that pullback in yields happens, higher gold goes, the lower dollar yen goes, and I think they're your two trades to play off the back of that. You can see stock indexes, the S&P 500 kind of grinding higher. Let me fix that chart up a bit. You can see S&P 500 kind of grinding higher, NASDAQ grinding higher, but the Dow Jones and the Russell pretty sideways. The DAX, the Euro stocks pretty sideways. So if you're looking for longs on equities, it's a bit tricky to pinpoint some direction. If you're looking for longs on equities, the S&P and the NASDAQ are the way to play it. Primarily the NASDAQ with the way it's moved. If you're looking for shorts on equities, the Dow Jones and the Russell seem the way to play it. But those yields pushing lower should be supportive for equities, so should help them continue to push higher. The NASDAQ probably looks the horse the back, but for me personally, on a pullback in yields, long gold, short dollar yen would be the trades for me as we head into today's European session.